Today we are speaking with Mr. Gopal Jain. He's the founder of Gaja Capital, one of the iconic uh, venture capital firms in the country. We thank you, Mr. Jain, for taking the time.
Thank you so much. Thank you, Prasad, for inviting me to this call. And, I was really looking forward to this. Business world and we go back nearly 30 years.
But we've seen that venture capital and private investment overall has been keeping up pace. In fact, the first 4 months of this year, we've had more unicorns in India than we've had either in the entire year of 2018 or 19. So what do you see? How do you see the outlook for this space in 2021 and beyond?
Well, globally, financial markets have been pretty steady through the pandemic. If you compare the pandemic to the global financial crisis, thank God, thankfully, there was no dislocation in financial markets. And, there's substantial liquidity around the world. And that liquidity is flowing into equity markets. India itself, yes, absolutely has attracted a lot of global capital. In fact, FDI has been very strong through 2020. So global investors, domestic investors, everybody's invested in India. Within India, there are two ways to look at the market. One is, this is a framework we have, which is accelerations and displacements. An example of accelerations is technology. An example of displacements is the financial sector. We've invested in both accelerations and displacements. And globally, of course, the bulk of the capital has gone into accelerations. So India Technology 2020 or India Technology 2021 is a very exciting proposition for investors, both domestic and international.
Right. So, obviously you mentioned technology just now, but, what are the sectors that you see that are hot? Within the technology space, you've got obviously, emerging tech and food tech and supply chain tech, et cetera, which is taking off. But, within the technology space and then even outside, what sectors do you think are a priority for investors this year?
Well, hot is a difficult term, but I would say I'll just talk about the sectors we traditionally have interest in. And investing is about focus, and investing is about, drilling down on a few selected things. So our traditional sectors continue to be of interest to us, but there has been a techization of our portfolio. So education is a sector in which over the last 15 years, we've done a lot of work, and it's more ed tech today than education. Similarly, we've done a lot of work in financial services, and it's very exciting to us from a displacement perspective. It's fintech now. So edtech, education has become edtech, finance has become fintech. Consumer is of huge interest to us, and it's become consumer tech. It's difficult to think of a consumer business without online. One new sector we've added in the last couple of years for us is software. And now increasingly software is sold as a service. So it's called the SaaS sector. And it's become interesting to us because there is now a market for software in India, right? So there is a critically sized market for software in India. Where is that market coming from? Incidentally, that market is coming from the hundreds and maybe a few thousand startups in the digital technology space that are building their businesses very differently from traditional businesses. And they are employing a lot more software inside corporate functions, like accounting, like payroll, like HR, like sales, ERP, across the board, inventory planning. So these sectors so we've just deepened down into these sectors, and you can see the accelerations in some of these sectors and also the displacements. Take a sector like education, right? There is an acceleration and a displacement. Where's the acceleration? It's in digital. And suddenly you have tens of millions of new consumers who are consuming educational content over digital. And what's the displacement? The displacement is in schools. Schools aren't functioning. Let me correct that. Schools aren't functioning in a traditional way. They're functioning in a digital way. So education is of interest. Then financial services, right? So how was the economy functioning without people being able to go to ATMs? So just as GFC brought in the ATM revolution and we moved away from branch banking, 2020, 2021 will be remembered when people move away from even ATMs and where their phones have become branches.
You spoke about EdTech. Now, within EdTech, obviously there's a host of areas that are getting traction. Obviously, like you said, schools are functioning differently. People even whether it's higher learning, whether it's in-job learning, whether it's reskilling, everything is now happening digitally, right? So how do you see this market expanding in India? Do you think that we have enough players that are coming in? What's the kind of traction you're seeing in the space? And how do you want, or what is the kind of startups and investable companies that you want to see in this space?
There's been a profound change in education. It's a very conservative sector. Education has not really changed over hundreds of years. Until a year ago, if you walked into a classroom, except for the fact that it has fans or air conditioners or maybe a overhead projector, it didn't look very different from what classrooms looked a few hundred years ago. It's a very conservative sector. But what is the biggest change from the pandemic? The biggest change is consumer change. Consumers have realized that more and more consumers have realized that learning is possible through the digital channel, right? It looks like a 50x. For every one consumer that was prepared to learn online, there are 50 consumers. Secondly, we've created a generation. Our children have become the first digital native learners, in all these years. Even for us, digital learning came later. But our children now have a huge advantage. They are starting off with digital learning, right? So when the pandemic recedes, when it recedes, I think is a matter of speculation. But whenever it recedes and things become normal, the question is what is going to happen to education? I don't think we're going back to the earlier paradigm. Yes, it's not as if schools will not reopen and colleges will not reopen. Look at the US, people are back in classrooms, etc. But blended learning is here to stay.
Right.
Blended learning was earlier considered the preserve. Initially, it was considered the preserve for corporate learners. Then it came into universities. And the legacy of the pandemic is that it will become a part of K-12 as well.
Right. So I think, it's making a profound change. I think, with all the work from home and remote working, I think a lot of people are now even exploring, staying in cities that are their native cities or someplace they just wanted to settle, because now not just their work, but even, the education of their children can be done remotely. So I think that sector is going to, metamorphosize not just itself, but also the society, right? But just stepping away from the sectors that you mentioned, there are 2 or 3 sectors that have seen an impetus in the last few months, right? Obviously, supply chain or logistics tech obviously has taken off because of the pandemic. Agri-tech in India has seen a boom, and probably the pandemic has pushed it along a little bit. And space tech, because the government has suddenly liberalized that area. So do you see sectors like this scaling up over the coming years? How do you see Indian investment firms looking at these sectors? Are we ready to make those big investments like a Tesla has got or a SpaceX has got in this kind of technologies?
Well, each of these sectors requires a discussion in itself. Let's talk about supply chain. We invested in logistics through the pandemic. And indeed, as India is digitizing, the entire supply chain framework is changing. The first big change was GST. For the first time in 70 years as a free country, we created a unified market. And so since 2017, supply chains have been changing thanks to GST. And the second big change is because of digitization, right? You have a direct-to-consumer economy which is emerging, which is completely changing supply chains. So there's profound change in supply chains. Earlier, it was large companies selling to small companies. Now, there are hundreds of thousands of small retailers that are the pace, because we see this very close. I can share with you that hundreds of thousands of retailers are onboarding onto online platforms, and they need logistics capability to meet with their customers, right?
True.
B2B is going from physical to digital. And that requires in itself a different supply chain capability, right? So there are various changes that are happening, of course, across supply chain, and that's because the way consumers are consuming, whether it is individual consumers or business consumers, is going to change, and there's going to be a profound change, and that will continue. You talked about two other sectors. These are again very large discussions, agri-tech. The thing is, technology is a horizontal that runs across many sectors. If your question is, does technology make agriculture an exciting sector for investors? Yes, it does. Right? Because Indian agriculture has a long way to go. And, in fact, I think there's some very interesting things happening in agri-tech. Agri-tech is only one part of it, but there is so much interesting that's happening in agriculture, right, around the world, plant-based proteins and stuff like that. Space tech, I think it's absolutely it's happening in various parts of the world. In some ways, it's linked to government expenditure on space. In some ways, it's linked to further applications. We have seen a big shift in the last 3 years in the number of private companies that are looking at applications, payloads in the space area. I would say it's a start, still a small base. Will there be a Tesla in India that will make large? I don't have the ability to look into the future, but I know that the future will surprise us.
I'm sure, sir. I think one quick question, if I can digress a little bit from the flow, and I do ask this to a lot of people when it comes up. You mentioned that GST has made a big change to the way the logistics happen in this country, and it's obviously then had downstream effects also. But there are a lot of opponents of GST as well in this country. So do you see GST as something that has been an enabler? And if you feel that there is something that can be done to make it better for businesses, what would be that?
I think 3 or 4 years into GST, I doubt if anybody really has an issue with GST per se. I think the opposition to GST has morphed into discussion around implementation. Right. So now the criticism has changed. Earlier, the criticism used to be, why is there GST? Now the criticism is that, oh, this hasn't been implemented the right way. Well, there is always scope for improvement. Right? Should we have a fewer number of slabs? Should we have lower tax rates? Rome wasn't built in a day. Right? I mean, first there was GST, now there is the e-way bill structure. I'm sure over a period of time, there'll be a simplification of the slabs. There'll be lowering of rates in some of the sectors. The good news is that nobody can blame now just the central government for this, right? Right. Whether it's good or bad, everybody's got a stake in it. In fact, states themselves can come to, and we have a whole myriad number of political groups that now are in power in various parts of the country, and any state can take the initiative to bring modifications to the table. So we'll keep on improving, hopefully.
Right. And I think the last couple of months have been really good. I think 1.25 lakh crores and 1.4 lakh crores has been stupendous. So I think, it's going in the right direction. But
I will say that I think the best way to get GST if you want to do a 10x on GST, then I think we also need to simplify it and reduce the rates.
I agree, sir. Thanks for your views on that. It always helps. I think a lot of the viewers that we have are always keen on understanding these perspectives, and I think that was a very helpful input from your end. Right? We've been talking about investment interest and the sectors, etc. But we'd like to understand a little bit more about your journey as an investor. How did it start? How have you gone about it? What are the key components of your strategy and your approach as an investor?
Well, I started investing at an early age, but of course I didn't know that it's going to become a lifetime pursuit. I first realized that it could become my profession, my career, my enterprise when I was on campus. I wanted to be an entrepreneur. I didn't want to just move to the US. And initially, it was what brought me to IIT was a love of technology. The technology markets in India were small then. So I started off by becoming a professional investor on campus and set up my first venture. I initially started with public markets, and then I discovered Buffett. And Buffett had a profound influence on my investing style. And I realized that I'm as much an entrepreneur as I'm an investor. And that led me actually to private equity and venture capital. Because private equity and venture capital is not just about investing, it's also about building businesses. And of course, now for the last 20 plus years, I've only done venture capital and private equity. Now, within venture capital and private equity as well, things have changed. Strategy doesn't change completely, but there is a discernible shift in technology, in style or in strategies every 5 years. So when I started investing as a venture capital investor, India was a capital scarce environment. If you had a checkbook, you were very popular. And now India is not a capital scarce environment. Therefore, it's not just about capital, it's also about value add. So private equity firms don't just have capital. In order for them to succeed, they also need know-how. They also need operating skills. And then the other shift I've seen over the years is being a minority investor versus being a control investor. When I started reading about Buffett, that's when I first understood how you can be an investor with a control mindset. And 25 years later, now India actually allows for control investing, in the sense the markets have changed. So 15 years ago, we used to invest with a minority mindset. Now we have a control mindset. We are open to buying control in many businesses, buying out businesses. Well, I think one thing which is still left is, can we own businesses for 20, 30 or 40 years? The joy of India is the only major economy in the world that will grow for the next 30 years. Right? There is no other major economy in the world which will grow for the next 30 years. So the real opportunity in India is to buy a business and hold on to it for the next 30 years.
Right.
Some of the investments I made 25 years ago, the increase in value is mind-boggling. All you had to do was hang on to those businesses.
Right.
So similarly, even today, one is to find good businesses, but the other is, how do you hang on to them for the next 20 or 30 years? Well, that's still not possible. But maybe in the next 5 or 7 years, you will start seeing investors with permanent capital who can hold businesses for 10, 15, 20 years. So things have changed over a period of time, and strategies evolve. Yes.
Right. Very interesting that you mentioned Warren Buffett and long-term business holding. Just the other day, I was reading something, I can't recall it off the top of my head, but one of the portfolio companies has grown 26,208% in the last 35 years. So, I think that if anybody wanted a proof that long-term investing works, there can't be a better. And the number has stuck into my head. I think 26,208, I recall it right in front of my eyes. So I think great insight. But sir, I think one of the things that has changed now in what you said that came across, right? Where you started in a way organically as an investor, you've grown organically as an investor. But now it has also become like a career path, right? Because like earlier we had investment banking or marketing or tech. So now, venture capital or private equity or investing has become a career path. So for youngsters who are in engineering college or business school or other vocational streams, right? Or people who are looking for a career change, what would your advice be in terms of how do they go about understanding how this business works? What are the resources? What are the books that they can depend on? And how do they gain experience to be able to break into this vertical?
Well, there's no substitute for knowledge, right? And the good news, like you said, is that now you can formally educate yourself. When I was on campus, frankly, just finding the textbooks took me months. That itself is a story that I'll write one day, as to how I could find my copy of Graham Dodd or Edward Maggie or Benjamin Graham. It took me months, and it was a journey. So today, first of all, there is no substitute for education, right? The second is, there is no substitute for application. and third is apprenticeship. So that should be the path, which is that acquire knowledge, apply it, don't be afraid to fail. You don't need $1 billion to become an investor in today's day and age. I started with 2,000 rupees. So, and the third is find a place where you can apprentice and you can learn from others. I've learned so much from others. And this is the path I followed. I had to self-educate. I couldn't, there was no place to go to learn investing.
Right.
But application and apprenticeship, those are the paths I followed to become an investor.
Mm-hmm. So I think interesting insights, and I think when you write that book about finding books, I think we'd want to hear about it first and learn about it before you go to everyone else. So we will be on the lookout for that. But while you're talking about how the scenario has changed, right? Could you kind of talk us about, let's say, the first few investments you made, and what was your thought process going about it versus today? What are the let's say few of the notable investments that you have? What is different, and are there still some commonalities in your way of thinking, in your approach when you make these investments?
Yeah. So, okay, if I talk about my first few investments, and let's contrast them with investments today, and you will see the commonality. So, the first venture capital investment I made was Television18. Right, and I invested in Television18 when it was worth 18 crores. 18 crores. We bought I bought 25% of it for 4.5 crores.
Right.
And I think it's worth about 6,000 crores today. Right. So, and what was the idea behind Television18? It was simply the rise of broadcast television, actually the rise of business news.
Right.
When I invested in Television18, there was only 1 hour of business programming a week. And I said, there is no way that this cannot grow. Right? So that is, let me just take a couple of more examples. Otherwise, we'll keep talking about the past. Let's talk about the present and future. Relaxo. We invested in Relaxo when it was worth 30 crores.
Right.
Today it's worth 22,000 crores. Right. And why? Because the entrepreneurs convinced us that India's national footwear is Hawaii chappal. And they make better Hawaii chappals than Bata. Because everybody used to buy Bata Hawaii chappals. That simple idea that we make India's national footwear and Indians are moving from walking around barefooted to buying chappals, and that we make it better than Bata was so powerful,
right,
that it's created a 22,000 crore business. I invested in Apollo Hospitals, 100 crores,
right.
100 crores value. Today it's worth 48,000 crores. From 100 crores, it's gone to 48,000 crores.
Unbelievable.
Right. We also bought I also invested in Bata. I think it was worth 100 or 200 crores. It's today worth 17,000 crores. Now let's talk about so, the 90s was a beautiful time in which you can buy businesses for single digit multiples, because businesses were available at those prices. These companies were much smaller, and you needed imagination to see them as to what they could become, and the fact that their multiples have gone through the roof. When I started investing in the 90s, people didn't think that there is any science behind valuation of businesses.
Right.
People never used to believe the balance sheets. There used to be two sets of balance sheets. Right? A company would have a printed balance sheet and it would have a real balance sheet.
True.
But then there were these companies in which the printed balance sheet and the real balance sheet was the same. Right? And you could trust these companies and you could buy into them.
Right.
Now let's look at some of our new recent investments. Our newest investment is in a company called Lead Squared, which is a SaaS company. Just as India has created many very large, valuable IT services companies, I think now we will create IT product companies.
Right.
So cloud has provided a level playing field to Indian companies. companies. Now Indian companies can also sell products because we have so much confidence. And we have all these entrepreneurs who worked inside some of the best product companies in the world. Another important point, there is a domestic market for software.
Right.
So Lead Squared is an exciting software business. Right. I'll give you another example of a recent investment. We've invested in Expresspeace, which is a supply chain logistics company. Mm-hmm. It delivers millions of packages across the length and breadth of the country. And why? Because delivery is one of the pillars of e-commerce. True. And you can see that e-commerce in India will become a $1 trillion market. And one of the pillars of e-commerce is fulfillment.
Right.
Right. So we thought it makes sense to invest in fulfillment. Hopefully you can contrast how I'm thinking today versus thinking.
Right.
But in each one of them, I think the core pillar was always to look at investing closer to building businesses. One can approach investment as a game, numbers and valuation and next round. But what I initially learned from Buffett was to approach investing with the mindset of an entrepreneur.
Right.
And I think in some ways that mindset hasn't changed.
Excellent. So I think the whole journey that you've described gives us, this whole spectrum of investments and how the thought process has gone into it and how they've paid off. I think makes a lot of sense, and it's fascinating because some of these things, News 18 or TV 18, Relaxo, Bata, we've heard about them, but very rarely we get to hear about the story behind the growth of these companies. And I think that's great insight there. And we hope that some of the new ones that you've mentioned, we'll be hearing similar stories about those 3, 5 or 10 years down the line. Keeping in that vein, right? In the last year, right, the pandemic has changed the way we do business, right? We've also seen a lot of Indian companies step up and innovate, right? If you were to kind of, zero in on one or maybe two such key things that you've seen happening in the last year, maybe it's a trend or maybe a single innovation that a company has done, what is it that's excited you about something that's happened in the ecosystem in the last year?
Sure. Well, the biggest innovation is the innovation consumers have done.
Right.
Consumers have innovated because economy is basically about consumption. Consumption is the process that transfers wealth from the rich to the poor.
True.
Right. And this is what businesses do, basically. Right. So consumption is what feeds the economy, right? When people consume, money goes from one pocket to the other. Those who have money to those who don't have money. And what is the biggest innovation? I think it has been innovation at every level, but one big innovation is just consumption through the online channel.
Right.
And the obvious it's become very obvious now, but it wasn't so obvious. People are consuming not just goods, people are consuming education, sports and fitness. I would say the second big innovation is automation. Don't underestimate it. I first started hearing of robots in the 90s, right? And, I remember once listening to Perot, the man who stood for presidency, and
right.
He once, this was about 20 years ago, and he said robots are going to change the world. And I was like, really? And I can tell you this, that one of the big innovations through COVID has been automation in India.
Right.
Companies have realized that automation is not just about cost saving, it's also about processes. And automation is not just about robots, it's also about software and processes. So whether it is software or whether it is manufacturing robotics, automation has done a step up. I mean, and it's not just automate, and it's not just business consumers. It's not just manufacturing companies. It's not just agriculture. It's also consumers. Right. Consumers are discovering automation inside their homes. And so I think those are the two things that come to mind, online and automation.
Right. No, I think automation is something that I would also kind of agree 110%, because I love automation. Everything in my house is automated, much to the horror of my parents and my wife. But it's something that's the future. I completely
In this is contained the germ of a very profound truth that automation is not just about substituting humans. It is about improving how things are done. So inside our businesses, we are seeing automation to a much greater extent.
While there's been some great companies that have come up, now like you said that the next decade probably is a decade of products in India, right? But what has also happened is that people are just chasing investment as though it's something that needs to have been done yesterday. I had a very interesting conversation with Mr. Mohan Das Pai, for example. He said that, look, if you're setting up a business, get money. That's what, for example, Vijay Shekhar Sharma did, right? So the point is, when is the right time for a business to go and start looking for money? And do you agree with this kind of an approach that, if you can raise money, just keep raising money to stay ahead of the competition?
I think smart entrepreneurs do two things, which is they don't confuse the financing markets with consumer markets, right? So, financing markets lose their head from time to time, and smart entrepreneurs exploit that. But smart entrepreneurs do not forget that businesses operate in the real world, not in the financing world. So the idea of attracting finance, whether it's a little bit of finance or it's more finance, or even is basically to build a profitable, sustainable business.
Sure.
Is to first of all find the right value proposition, attach scale to it, but quickly get to the point where consumer markets can give you the profitability and sustainability. Why? Because financing markets are fickle. Just people go from one extreme to the other, right? I mean, the same thing which looks like, which is like going out of fashion one day, nobody wants to touch it in 18 months.
Right.
So I think Mr. Pai is a very smart entrepreneur, very intelligent, very successful entrepreneur. And this is what he possibly wanted to say, that entrepreneurs, it's a great time to be an entrepreneur.
Absolutely.
There is no shortage of capital, but there is a shortage of good ideas and innovation. So what a great time in this world to be an entrepreneur. Use financing markets to raise the capital, but do not forget that the objective of all of this is to build a profitable, sustainable business.
Right.
And to achieve independence from financing markets.
Right. So if you were an entrepreneur, right, what would be your approach? How much would you bootstrap and how much would you then go and look for money?
Well, there are some businesses that simply don't have choice, right? They have to operate at a certain scale for them to be functional, right? But many businesses have choices. So I think it's a question of, you want to play the long game, or do you think this is the first of many innings that you want to play? And the longer you delay raising capital, the more you can own of it when you finally it becomes valuable. But at the same time, you also lose time, right? And sometimes markets that are rapidly changing don't wait for anyone. So, I think it's finding the right balance. Now, until 10 years ago, when we would look at businesses, we would often be the first investor in them, even though the businesses were 7 to 10 years old. Today, it's difficult to find a 7-year-old, 5-year-old business without a financial investor in it.
That's true.
So I think we've gone from one end to the other. I would say that financing today is inevitable. It's a necessary good. It can be, you can partner with investors to accelerate, to grow, but a certain amount of discipline ensures that entrepreneurs get the right outcomes for their effort and for their labor.
Right.
I mean, because lightning does not strike in the same place twice. If you've got a big idea, then the greatest wealth in this world has been created by doing the same thing for a long period of time. And if you want to do something for a long period of time, you better have some decent ownership in it.
Correct.
Right? I mean, if you look at most successful stories around it, it's not people who do Mr. Elon Musk is a different breed altogether. But there are not many Elon Musks, right?
That's
So if you look at a Bezos, one business is doing it for life. Bill Gates, one business for life. Founders of Google, Google. There's so many other examples. Facebook, Mark Zuckerberg. Everybody does one business and then you do it for a long period of time. Larry Ellison. Initially, of course, while getting started, they might have tried a couple of things here and there, but you take one big idea and then you pursue it for the next 30 years, and you can do it if you have some stake left in it, and then it's worthwhile as well. Otherwise, somebody else will come and take control.
Yeah, understood. So, but when somebody does come to you for investment, what are the 2 or 3 key things that strike you and tell you that, look, this one looks like it can scale up?
Well, we are growth capital investors. We're not startup investors. Right. And I think for growth capital investors, there is a lot more data. Right. So for us, first of all, of course, the entrepreneur is important. The addressable market is important. The product market fit is important, but unit economics is also important. So I think as compared to venture capital investors, by the time somebody comes to us, one must also demonstrate unit economics. That listen, yes, I have consumers who want to buy my product or service, but yes, even the economics is good.
True. And are you seeing that shift over the past couple of years or more towards a path to profitability? Because initially, in the first part of the previous decade, for example, the problem that most people saw was that a lot of businesses are getting funded, great ideas, but no path to profitability. Are you seeing that change in the recent past?
Well, I think COVID has certainly improved the economics for many digital and technology businesses by reducing the cost of customer acquisition. Right. So, but this varies from case to case. Financing markets are hot, and when financing markets are hot, then entrepreneurs can at times be tempted to find sustainability from financing markets as opposed to consumer markets. But I would say certainly that for technology enabled businesses, for digital businesses, and for software businesses, COVID has helped improve economics to some extent.
Right. You've made a lot of great investments. We heard about it, and I think Gaja Capital has made a name for itself in the Indian ecosystem. But I'm sure along the way you must have seen some deals which you didn't really back at that time, right? Are there some examples that you feel, maybe not a regret, certainly not, because you've done great in your life, right? But are there some of these opportunities that you passed on which you thought, wouldn't have made it, or passed on for some other reasons which have done really well?
Many regrets in my life, right? And I don't mind accepting that. In fact, I think one should be very conscious about one's regrets. I'm not one of those people who says that I have no regrets in life.
True.
Having said that, what I want to talk about are not the regrets around which investment I didn't make, but more around style. And my bigger regrets are why don't I still own Relaxo?
Okay.
My bigger regret is why don't I still own Apollo Hospitals?
Right.
So I think I spend my time thinking about that, not which investments I missed. Of course, I spend my time thinking about those as well because they teach you something.
Right.
That here is a company which went on to become a unicorn and so on and so forth.
Right.
But investing is a world in which the bus called opportunity leaves every 15 minutes.
Right.
You miss one bus, you catch the next bus.
True, sir.
So you got to focus on catching the next bus.
No, great insight. I mean, I talk to a lot of people about this whole anti-portfolio thing that Bessemer has kind of put out in the market. Right? I think it makes a lot of sense that they're out there saying that, look, yes, these are the things that we passed, but we are learning from it rather than, putting it somewhere, in the closet.
Yeah.
Right? So I think, great to end. But, I think this is the first time somebody has spoken about, why I didn't hold on to it. And I think that's a great insight that, by design or by accident we've never had before. So I think thank you for that. So before we let you go, a couple of personal questions, right? We hear a lot about Gopal Jain, the investor and the leader of Gaja Capital, right? But what's your personal life like? What are the things that keep you interested outside of work? How do you think of yourself? With your employees, as an individual, how do you want to kind of deal with your employees? Do you find time to interact with them personally? What's your philosophy around your personal life?
Well, I believe in work-life. I believe in work-life harmony, not work-life balance.
Right.
So I don't think my personal life and my work life are two parts of my life. They are two sides of the same coin, and there are no distinctions.
Mm-hmm.
And I think so. This is the way So there is no work life and then there is a home life. I mean, it's in order to build something, you need to do it for 24 hours.
Right.
But in order to make it easy for yourself, and in order for you to be easy on the others around you, it must be something that you really love.
Right.
So I don't have any sharp boundaries between work and my personal life. I have over a period of time, rather than number of relationships, you start focusing on quality of relationships. And what brings me back, a small way we can make an impact on society. Right. I think India's tryst with destiny will be delivered not by its politicians, but by its entrepreneurs.
Right.
So it's really exciting to work with entrepreneurs and to be one yourself. Right. And that's what brings you to work every day. That's what keeps you going and working around the clock.
Personally, I do, and people around me, we love to read, we love to watch stuff that enriches us, right? So what's that last thing that you read or watched? Maybe a movie or a documentary or a book or a right? So thank you for your kind words and for your time. So thank you very much.
Bye-bye.
Past, and what learnings would you like to leave us with from that?
Sure. I think this book is worth a read. Can you see this?
Yes, now we can. Radical Uncertainty.
Yeah, I think this has been one of the more influential books that I've read in recent times. It's actually, I don't read books on investing anymore. But it's a very interesting book on how to cope with uncertainty, how to look at uncertainty, how to improve decision making. And it's a book that I would recommend to all of you.
Yeah, we are deeply grateful for you to take out time today and talk to us. It's been insightful and genuinely insightful, and we hope we can keep coming back to you and getting these nuggets of wisdom from you. Thank you so much for joining us today, sir.
It's a pleasure speaking with you, Prasar. You love your work. I loved your questions. I know that there's an entrepreneur and an investor inside you. And very, very thoughtful, very insightful conversation here. And great speaking with you, and look forward to meeting again, talking again.